Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hello. Hopefully that's working. Hey, good morning, everyone. Welcome to Wealth Coffee Chats. There's Kevin already in the house. Morning, Kevin. Good to see you. Let me know, folks, if you can hear me loud and clear. I think the audio's going all right this morning, which is good. Everything charging along all right. While we're sort of waiting for everyone to jump on and get things going, we'll do the regular intros. Jason Witten's, if you didn't already know that. Most of you do, though, which is excellent. So good to see you here, folks. Thanks for joining Wealth Coffee Chat, something we do each. Talk about that in a minute, I think. Each weekday, about 8:10. Hang out, have a little conversation about what is going on out in the marketplace, ideas, conversations, those sorts of things. So welcome along. If that's you, if you're new to the show, let us know in the chat. Say hello. There's a few there already, which is kind of good to see. The regulars back. Chris, good morning, mate. Awesome to see you again. Bunty, morning. How are you? Justin's there too. Got Luke in the house. Fantastic to see you, Luke. If you are new, then let us know. Where are you dialing in from, folks? What is going on for you in your world of property investing? Today, what I thought we might talk about is the idea of can we learn something from some of the wealthiest investors around? I think we can. One of my faves. Morning, Tim. I think I sort of let the cat out of the bag here a bit, but one of my faves is someone who owns 6,000 properties or is an investor in 6,000 buy and hold pieces of real estate. Anyone want to take a quick guess at who that investor might be in Australia? One of Australia's richest people. Australia is a pretty interesting country when it comes to the wealth. That is true. It's usually loaded up in the farming and the banks and the mining, but certainly property investing or property companies are up there too. That is right. Sonia Triguboff, Harry Triguboff, and he's got an interesting story. Harry. He started his property company in, I think it was the 1960s, I think. something like that. Anyway, he was a taxi driver. Bought a small 4-pack, small piece of land, and developed 4 units on it with a bunch of his mates. Made some money and went on to be one of Australia's most prolific property investors, but also a property developer, but also quite a significant property investor. And for over the years, Harry's version of the world is one of the versions that myself and Sam have talked about a lot when it comes to, what type of strategy, what type of big picture idea would we sort of take some lessons from. And Harry Triguboff's portfolio and how he's grown it and what he's done is one of those places and spaces that we've done that over the years. So thought we might talk about some lessons from Harry this morning. So let's dive into that one and have a bit of a look. Who wants to know? I think I put it in the chat anyway, or the headline. Who knows how many properties Harry Triguboff has invested in? Anyone know that one, folks? Actually, it's probably a little bit more these days. I think some of the info I've got is a little bit older than of recent times. But if you have a look here, so, Rich List, this is 2024. Of recent times anyway, Harry is still up there. Harry Triguboff, Gina Reinhart in the mining world. You can see the split of the wealthy is really, when it comes to Australia, mining, property, and technology. Interesting. Agriculture is not in there when it comes to the rich listers, but it is certainly one of those ones where our stock exchange and our stock market has a lot of people. Yep, 6,000 plus, exactly, Chris. Lots and lots. But what are the lessons we can take from Harry and his portfolio? He's estimated to be worth a couple of dollars, which is pretty good. And there's some lessons in how Harry has put his deal together, or not his deal, but his portfolio together in a way that maybe we as property investors might be able to take some lessons on. How could we use the lessons from Harry Triguboff, owning 6,000 properties or more over, a breadth of Australia. How did he do it? What did he do? So let's have a look at sort of how Harry puts his investing together. Invest like Harry. What would Harry do, folks? What would Harry do? And this is, like a conversation in and around, asset allocation, and I think we need to all make sure we're sort of cognizant of our stages of investing. We all know the 3 stages of property investing: the acquisition stage, a consolidation stage, and a lifestyle stage, right? But, what are we doing, and the percentages and the times when it comes to investing our money and our resources over time, and how can it accelerate? How could we accelerate some of our investing? So it doesn't surprise us that, well, maybe it does surprise some people that Harry Triguboff does own, buy and hold residential property. All right, he owns just regular, straightforward residential property, folks, and it's 30% of his portfolio. Now, in the early days, the percentage of portfolio that Harry owned, which was residential ownership, probably across his wealth and stuff like that, was more than that. When he started out, it was 100%. So, what does that look? 30%. Now, interesting. What in your net wealth, folks, in your wealth pie, chuck it in the chat for me. Just a quick, mathematical equation for you. What is in percentage? What's in resi property? What's in shares? Because most of us should have some shares. Maybe it's in our super often. And what's in, let's say, business? And those are really, if we have a look at it, what we're talking about here for for Harry, right? So the asset allocation, and this is kind of like not financial advice, by the way. All the financial advisors would be having a little conniption right now if they were listening in, going, "What are you doing, Jason? You're talking about asset allocation." No, I'm just talking about the percentage of money exposed to different places. What's your percentage? 75-25 for Luke. Yeah. So, in Luke's circumstance, maybe that 25% commercial, is a version of being exposed to a business return, right? Or whatever that might be. Nearly all resi for Tim, 85 and 15 for Brad, right? Now, not saying that we all need to go in and have a look at Harry Triguboff's, asset allocation and rearrange our world like that. But, it does pose some questions that we all should think about and ask ourselves over time as we grow our wealth. Where should we, maybe diversify or, cross-manage exposure when it comes to different types of income and different types of capital growth, et cetera, et cetera. So, it's an interesting one. So rental property, he's got 30% or more of his wealth, his value in just plain old, regular, boring residential property. And, interestingly enough, they're not house and land either, folks. Harry likes, multi-density or high-density apartments. So, guy's worth, what is it, 8 billion or something? Or 10 billion? $10 billion. Likes an apartment or two. Not a bad thing. Now, also what Harry does is he accelerates his wealth by producing his own types of property. What type of investing would you call that, folks? When you create your own properties, all right? And I'm trying to ask the question without giving away the answer. What type of property? It's not retail property, folks. It's not property that's on realestate.com. What type of property is Harry creating for himself to put into his portfolio? Because a lot of his, and to be honest, a lot of his stuff in here. So he's the developer for sure, Tim. And what style of property? Not retail, but anyway, it's a word that people use often. He's creating properties. He's the developer, and he's creating wholesale properties to put into his portfolio. Now, what's the value of that, folks? What's the value of that? What can happen building at wholesale? That's right, Chris. What's an upside of that? Chuck it in the chat if you can. And I know sometimes people are driving or busy at work or whatever. But so Harry says, all right, well, it doesn't make any sense if I'm making all this profit, if I'm creating and developing a wholesale pricing for real estate, that I would then sell it, incur these damn taxes, right? And, pay all this friggin' money to the government. And then, then I have to go and do it again. So, yeah, definitely cheaper. He can sell them for retail prices. He can make a margin. There's a lower cost going in. You're right, Chris. So let's say he can develop nothing boring about resi. You're dead right, Sonia. It's not boring at all. You're dead right. It can get a bit spicy. So let's say, he creates a 2-bedroom apartment for himself for $500,000. It's worth $600K. He's got instant equity of $100,000. He doesn't have to pay tax on that. There's no tax payable. Like, to earn that, if he structured it in the right way, so if he develops it and structures it in the right way, he's got instant equity, instant wealth, no tax on that, and then immediately, it turns into a rental income. And let's say it rents for $650 a week. Well, his rental yield goes in at a 6.5-7% rental yield into his portfolio, right? Then at a 5% rental yield, folks. So wholesale on the way in, not only wholesale pricing, instant equity, and a higher rental yield. So I like that. So for most of us, we can do that. Absolutely, we can. We can do it at a bit of an arm's length. We can do that where we, buy off the plan. We we do a house and land it in a small scale, or for some of us, we can see you, Sonia. For some of us, we can do that ourselves as our portfolio grows and create some wealth on the way in. So, but let's have a look at this. There's a couple of things here. He's got some empty land and land under construction. That's his development arm, obviously. He's got some other things which you might call the business or high income that Harry's creating. And really, at the end of the day, the Meriton Serviced Apartments, what's that? What is he doing there, folks, with his income? All right. So, and I'm asking a lot of questions because I want everyone to sort of think this through. These properties are resi properties, residential properties. And what's he done? So if you look at it, Harry's portfolio is 66% residential real estate, folks. Residential real estate. And this is not an exact version of the world. Obviously, this is something I got out of the newspaper, so this ebbs and flows. But right now, high income short state, Chris. And so, he's got some commercial stuff down here, right? He's got some commercial. He's got some childcare centres and commercial and retail and that sort of stuff. But that's 4% of Harry's population. Portfolio. But it's residential, folks. And don't miss this. This is kind of the piece that I love that I've been copying on Harry's model for forever and a day. Just a regular residential property, which you can, there's all the bells and whistles of residential property where it's got, a better capital growth profile in the right location. It has lower vacancy rates, on average than, commercial property, and the lending's more favorable and blah, 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 right? So that's one of the reasons I like resi over commercial. And not that I'm against commercial. I've just seen it work better for those starting out in investing and et cetera. But you can have a regular piece of residential real estate and you can transform it, folks, into a high income property. And you've still got the other benefits, high LVRs, lower and cheaper interest rates, et cetera, et cetera. So I like that when it comes to this stuff. So, what are the lessons that we've learned, or what can we learn from Harry? Well, in the acquisition phase, the resi property works. The transforming, this is kind of, either transform or wholesale can accelerate your wealth and, create an income that is pretty nice for your lifestyle phase. So anyway, I thought that might be worth sharing today. I really like the idea of looking in and seeing the evidence, the examples that others who are succeeding in this world of property investing might be able to show us, folks. So I think Harry's one of those for me, that's for sure. Anyway, that's about it for me today, folks. That's about all we got time for Wealth Coffee Chats. Hope you're well. Thank you. Thankful Thursday. Done and dusted. Join us again tomorrow. He's pretty well. He just has a machine, doesn't he, Chris? He's always got acquisition going on. For some of us, we might stop acquiring eventually. But Harry's got a plan. I think I saw him interviewed not so long ago, and he's like, "What do you mean? What do you mean I should retire? I'm 85. What would I do?" He's like, I'm not playing golf. Yeah, it's an interesting one, huh? Anyway, there you go, folks. Good to see you. Thanks for joining me on Wealth Coffee Chats. Wealth, Wine, and Wisdom is on the agenda to make a comeback, Tim. We've got a little surprise coming for you guys. Andy and I have been trying to organize ourselves when it comes to our logistics. Andy, the new dad, Friday afternoons, getting on the sauce, wasn't that amenable to being a new dad. Anyway, no, it's on the agenda. Tim, stand by. We've got an announcement coming your way. You might you might enjoy. Anyway, there you go, folks. Good to see you. Thanks for joining me. Join us tomorrow for Finance Friday when it comes to Wealth Coffee Chats. There you go, done and dusted. Thanks, folks. Take care. Bye for now. Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.